Hey everyone, we are live on video. Welcome to all my live viewers to Wealth Redefined. Glad to have you with us today. This is kind of the green room prep before we start the audio session for the podcast. So I've got Matthew Allen here from Kemper Health joining us. Hey Matthew.
How are you doing today, Michael?
Good, welcome.
Thank you.
So as I explained before, and as my audience knows, we'll go ahead and go live here with the podcast portion for audio here in a moment. So I will cue up the music and we'll get started. So stand by. Thanks everyone. Whoops, I almost forgot to hit record. I have a big sign up here saying hit record that I ignored. So, let's do this take two. Oh, hey, well, I've got you. So if anybody's watching as well, just a reminder, you can post comments in the comment section below on either YouTube or Facebook Live, depending on where you are. And if we see any comments come in, we'll bring them up to Matt as well during the discussion. So here we go for reals as I hit record. Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, independent financial advisor and owner of Elevation Financial. Thanks for joining us today. We're going to close out the month of August, which is my insurance-themed month, with a discussion on health insurance. Important discussion, and I'm joined by guest today, Matt Allen from Kemper Health, who's going to tell us about all things health insurance today. So I'll give a quick intro on Matt. We'll learn a bit more about Matt, and then we'll jump into the topic. So Matt is a health insurance expert from Kemper Health, specializing in health insurance education for individuals, families, and small business owners, which is a big portion of my audience, I know, helping to navigate the confusing health insurance climate, which I think we can all agree is not simple. It's fairly confusing, and providing unique solutions and customizable health insurance options to fit your individual needs. So Matt, welcome to the podcast. Glad to have you.
Thank you for having me, Michael. Excited to just, get into it. Try to help some people out, solve some problems they might be having, or at least you really hit on it. It's about health insurance education. It's about letting people know, because unfortunately, for whatever reason, it's very confusing. There's a lot of disinformation and there's a lot of misinformation out there. So happy to clear up anything and everything that I can.
Awesome. Well, first, let's hear a little more about you. I gave the kind of the dry professional bio, but what are some fun facts about you?
I've got two daughters, 13 and 10. They're crazy about soccer and cheerleading. I've been doing this for 5 years now. In 2 weeks, I'll be starting my 6th year, all with Kemper Health. And I graduated with a degree in economics from IUPUI and rolled that right into this position.
Wonderful. Mm-hmm. All right. Very cool. Well, thanks for sharing. And I know you're excited to jump in. So, this is a great topic, I think, to wrap up the month with, because health insurance is really important for so many people. It's probably top of mind for the vast majority of people when they're thinking about job changes or their career. It's always kind of a forefront concern for many people. So I'm glad we're going to jump in. So first off, let's just start off with, do you have any stats for us? Any statistics on health insurance in the U.S. in general? What's the current landscape? How many people have it? How many people don't? What are the common type percentage-wise? Just some general stats that might be interesting to start with.
So right now, there's roughly 330, 340 million Americans, right around there. And there's still about 26 to 28 million who are just completely uninsured. They don't have anything, which when you look at it percentage-wise is only about 8 or 9%, which doesn't seem like that much, but that's still 28, 29 million people without any type of coverage. If you look a little bit further into that, there's about 20% to 25% of that who has coverage through a state-run program, such as Medicare, Medicaid, CHIP. That's where a lot of kids get coverage. The elderly obviously get coverage through their Medicare. And then the largest chunk of people, which I think is the area that are kind of, it's the most interesting right now, is the employer sponsored coverage, that group coverage that you kind of mentioned. It hovers right around 48 to 50%, and it's been steady over the last decade. The 48 to 50%, whether it's you yourself get coverage through the work sponsored plan, or your spouse does, and then your kids are on it. So about half of America gets their coverage through an employer sponsored plan, which is pretty nice, because those tend to be the nicest plans, because they're very interested in retaining and attracting employees. They want to keep them around. They want to keep them happy. They want to keep them healthy. So it's typically a pretty high quality plan, and it's become part of their benefits package. Really, that's what a lot of people are looking for.
Yeah. So we're still in this climate where the most popular and most common way to get health insurance is through a job. That's still the climate today.
And it's been holding steady. And unfortunately, what a lot of my appointments have been since the pandemic is people are losing that coverage because they're losing their jobs. It's somewhere 10 to 12 million people have lost this coverage. And so now they're in this situation, Michael, where they have to determine, well, do I continue this coverage with Cobra, which it allows them to keep it for up to 18 months, but then they have to pay the entirety of the premium, as opposed to where their employer used to kick in anywhere from 50 to 80%. A lot of people can't afford that to begin with, especially if they've lost their income now due to the loss of the job. They can't really look at that as a viable alternative. Mm-hmm. So now they start looking at maybe the ACA is right, maybe it's a private insurance, maybe a cost sharing. They're not sure when they'll get another job with group coverage. They're not sure if maybe they go into business for themselves. Maybe they find a job that doesn't offer coverage. It's a very difficult time for a lot of families out there right now who especially are going through a job transition.
Right. Well, let's talk about the options. That's kind of the meat of our discussion today, options, and helping our audience to understand the options. Mm-hmm. And I think this is great because a lot of times people just kind of see two options, okay, job or the exchange, and like that's all they see. And yeah. There are more than two options out there. And I think understanding what paths are available to people is really going to help them make better decisions. And I'll just go ahead and say, as well as a disclaimer, that obviously well, maybe not obviously yet, but you do work for an insurance company that does provide one of these options, but you are extremely objective and helpful. And I've been really impressed with how education focused you are. And you'll tell people often, hey, if the non-Kemper option is better for you, you'll just tell them and you'll advise them appropriately. So I really appreciate that about you. So I want to reassure our audience that you're here to educate. So
it's really just the fact that I've been doing it for 5 years, Michael. It's pretty easy for me to identify within a few minutes of talking to someone which option will be the best. We still have to go through, health questions and what their values are and what the priorities are and everything to really make them see it, because it's their decision at the end of the day. But you're exactly right. It's about education. I don't get any benefit if I put somebody into a negative situation or something that isn't going to work out for them. Too often I find that people are finding out how their health insurance works and what their coverage is when they go to use it. And that's the worst time to find out what kind of health insurance you have, because it's too late to do anything. So I'm very much about, why don't we get out in front of it before you even select something different or choose anything through me, through the exchange, electing Cobra coverage, a cost sharing plan, whatever it is. I need you to understand how it's going to work. I need you to understand how you take it into your doctor, what your networks are, your deductibles, everything like that. So, really kind of still, the best way to start is still through that employer sponsored coverage. Since half of the country gets it through their employer, either through their spouse's employer or their parent's employer, it's the most prevalent out there. And I got to tell you, it's just the highest quality. It really is. If someone's upset about their premiums through their employer, they can certainly talk to me and shop alternatives. But it's just such a high quality program. It's just the issue that we're finding is the Kaiser Family Foundation has done this study over the past decade every year, and the most recent one that they have results for is 2018. Is only 48% of small businesses are even offering group coverage anymore. Because if you are 50 or fewer employees, you're not legally bound to offer anything. There's no tax penalty. There's no anything. And so a lot of these small businesses are looking at the cost of the premium to offer it to their employees, and it's untenable. They're finding alternatives. I'm sure you know a lot better than I with the different HRA options and the QSERA options, as far as still providing their employees with something to go procure their own health insurance. That's an area where I could then help those employees with those additional funds, help and go find something if the employer wasn't able to offer some type of group coverage.
Mhm.
The other issue a lot of these employers are finding is when they do offer a group plan, at least, and this is just an average, each state is different, but at least 70% of the employees have to opt in for the group to even be considered to be created. So if you have 20 employees and you are offering a group plan and only 8 of them are even interested, you're not even able to start the group plan. And so that's been a high frustration for a lot of employers too,
Right.
is just finding the right fit for them and their employees. Most of them want to do something. Most of them want to offer something. It's just when the premiums get up to $500, $600, $700 a month per employee, it just becomes an unviable alternative when you're talking about the different benefits.
So let's walk through the options. So obviously we have employer plans, which may or may not be available to everyone listening. So we've got
Sure.
that. So besides employer plans, what other options do you see as the major players? And can you walk us through each one individually in terms of what people need to understand about each particular option?
Absolutely. So if your employer plan is terminated or you just were never even offered one, there are basically 4 main options. Healthcare.gov, the marketplace, is where I take every single individual first off. That's just where we go. They're going to want to know your zip code. They're going to want to know your age, any tobacco use, and they're going to want to know your adjusted gross income. What this will allow them to do, they need your zip code because they need to show you which plans are available in your area, and they want your adjusted gross income so they can compare it to the federal poverty level to see if you qualify for a tax credit. So the way that works is if the household income based on the number of dependents you have is 137% or below the federal poverty line, you qualify for state-run insurance. It's very affordable. It's very inexpensive. And I 100% recommend that for people who fall in that bucket. All the way up from 137% to 400% is that sweet spot where you qualify for a tax credit on the exchange. So you go to marketplace or you go to healthcare.gov and browse the marketplace. There's 2 main companies in Indiana that are still offering, and you'll get help paying for it. Now, what some people, and I've talked to a few accountants, have cautioned, and I'm sure you've possibly run across this, is if you end up exceeding that threshold at the end of the year, when you go to file taxes for the previous year, you will owe that tax credit back on your premiums. I've only seen a couple cases where that is the case, but that would be something to really take into consideration. The best part about the marketplace, though, is not only the tax credit, but also pre-existing conditions and the 10 essential benefits. If you are able to enroll in a healthcare.gov plan, there are no health questions except for if you use tobacco or not. All of your pre-existing conditions are covered 100% from day one of the policy. That's been a godsend for a lot of people who otherwise couldn't qualify for health insurance that had to be underwritten, where they take your health history into account. We'll get to how those still exist. But on the ACA, it's fantastic because it includes all those people. So for anybody who's receiving a tax credit based on their income, or anybody who otherwise has pre-existing conditions that are prohibitive to individual health insurance, the marketplace is the first and last stop I typically take them. For people who are otherwise healthy and otherwise are above that threshold of income, a lot of the ACA plans may not work the best for them. There are a few idiosyncrasies about the ACA plans that do make them so expensive. The number one thing is the 10 essential benefits. Every single one of these ACA certified and qualified plans has to include what is deemed as the 10 essential benefits. Now, a lot of this is obvious stuff and stuff everybody wants. It's hospitalization, it's surgical, it's outpatient, it's, ambulatory services, prescription coverage, the really important stuff for any type of injury or illness. But things that are included in all of them as well that some people may or may not need, or they vehemently oppose, or that just add cost to the premiums, are going to be maternity coverage. That's the big one. Every female on any marketplace plan, no matter what age, has maternity coverage. Birth control is included in that. We have drug and alcohol abuse and rehab is included in there. And then one that's been very prevalent, and especially throughout the pandemic, is psychiatric help. All of that stuff has to be included in there. So there are some people who are above the income threshold, who don't have the severe pre-existing conditions, and aren't really interested in having all those things that I just described within the 10 essential benefits covered. And they are who Kemper Health primarily helps. So once we've gone through employer-sponsored coverage, whether or not someone should elect COBRA if they lost their job and that's an option, and once we go to the ACA, that's when, if they're still sort of on the fence about all that, or maybe those aren't the right options, then we'll talk about Kemper Health, because it's a different type of insurance. It's individual health insurance. What
So
that
Kemper-
means.
sorry to
Go ahead.
So Kemper Health, would it be categorized as similar to just going direct with Anthem or going direct, or is there a different category? How would
So
you categorize something like Kemper Health, and are there competitors?
it used to be. So Anthem right now, at least in the state of Indiana, you couldn't walk in there as an individual and get an Anthem plan right now. They don't have the plan anymore. They've got some short-term plans, and they've got group plans, and they've got Medicare plans, but they don't have that individual plan anymore. So theirs is more an all-encompassing, one size fits all. You have one deductible, you have one out-of-pocket max, you have copays, you have a network. That's how those plans typically work. What the Kemper plan does is it's broken health insurance down into its individual parts, so then it can become customizable. This works reasonably well for the majority of people who like it, for the majority of people who understand it, and for the majority of the people who qualify for it. This is often a more affordable alternative, and it's a more fungible alternative. It's more viable. They can take it wherever they want to go. The Kemper Health plan is different from the Anthem and the Care Source and the Ambetter, because the Kemper Health plan, it's a contract with the individual. What that means is there's no network restrictions on where the plan is accepted and where we will pay. So that means if something happens to Michael Reynolds is covered under Kemper Health. Whereas with these others, you are going to a network of doctors and providers and facilities, and there's pre-negotiated rates, and there's, co-pays and everything. With Kemper Health, we allow you to go wherever you want. So then your payment is either based on a fee-for-service sort of indemnity structure, where we will pay a set amount per procedure you have, a set amount per doctor visit, a set amount per MRI if you need testing. We also have 80/20 plans for disease and accident and injury. In case you fall down and break your leg, you can get coverage wherever you want to go, and the plan will pay 80/20 up to certain limits per incident, per occurrence. So ours is more of a contract with you. The reason that our plan has limits is because we do allow you to go wherever you want to go. So as long as if people want to take back control of their health insurance, and they want to take control of where they are seen, and they want to take control of the cost, Kemper Health is a very viable alternative, assuming they're comfortable with how it works differently from, say, an Anthem plan like you brought up, and as long as they're comfortable with customizing it.
So it sounds a little bit like it's almost like the medical equivalent of property and casualty insurance, where you're kind of saying, hey, I want this type of coverage. I'm going to leave that out. I'm going to add this. You can be very specific about the things you want covered, it sounds like. Is that correct?
And that's very correct. One of the big things that I see with people, so one of the 10 essential benefits on the ACA is that preventative care is covered 100% as long as you're in network. I think that's great. I think preventative care is a wonderful thing. You go and get your yearly physical, blood work, whatever you need, child immunizations, well child visit, it's all covered. I think that's fantastic. But that's one of the areas where on the Kemper plan, it might be more cost effective to leave that off, and then you sort of go and shop around, and you only use that when you want to do it. Sort of like the property and casualty. The preventative portion of the Kemper is very nice. It's convenient, it's pretty cost effective, but that's sort of like getting a maintenance plan for your car instead of for your auto insurance, where that you've got liability and collision and medical on there. You don't really bring out your Allstate card if you're getting new tires. or if you're getting an oil change or an engine flush. So those are the type of ways that you can customize a Kemper plan to help you save on premiums. Because at the end of the day, my job as a health insurance agent is to, number one, make sure you're covered against a catastrophic loss, but it's also to, as long as you're comfortable with the liability amounts, it's to keep as much money in your pocket as I can. It really is.
Okay.
Yeah.
So, first of all, you made the healthcare exchange, the marketplace, sound pretty good, actually. Like I think a lot of people don't know much about it. It just feels like this government program that seems kind of weird or difficult to understand. But you made it sound pretty good for a lot of people. So I think it actually sounds like it's an extremely viable option that does help a lot of people. And then Kemper, it sounds like you said there were four main types of options outside of Employer. So we've got the ACA, the exchange. And two, we have Kemper, which also sounds really interesting and customizable, and sounds like it'd be a great option for many people. So we've got two more to learn about, right?
Sure. So the other two main areas that we talk to individuals about, first one is short-term plans. These are a very viable alternative. The cost of them has actually been rising a little bit. I've noticed Kemper Health doesn't offer one, but I have tons of resources for people who do offer them and can allow you to shop them. They were initially created as sort of a stopgap. Maybe you retired early and it was to get you to Medicare. Maybe you just turned 26 and you were off your parents' plan, and so you needed something until you found your own plan. You start a new job and there's a 90-day probationary period before the group benefits kick in. These are all very viable times to use a short-term plan. What a lot of people have been doing recently is using that as their primary in lieu of an ACA plan, in lieu of a Kemper plan. They're using a short-term plan. The reason that this gives me pause is they are meant, the name is, it's not just a clever name. They're meant to be short-term. They're not meant to be kept for a long time. And the reason being is that they're still underwritten. Okay, you can still be declined. You're not guaranteed issue a short-term plan. And they also can only last 364 days. You are allowed to get something that's called a tri-term plan, where you can renew that 364 days 3 times. Okay, but with each new policy comes a new no pre-existing conditions guideline attached to it. So
you're going to renew it 3 times, so up to a total of 4 years you can have it.
Yes, exactly. So there's still that little gap where it's not meant to be a permanent option, but they are cheaper than, say, Kemper Health. They are cheaper than the ACA. They typically have quite a high deductible, maybe $5,000 or $10,000, and then each term has a limit. It has a maximum of what it'll pay, anywhere from $250,000 in total expenses all the way. I've seen one go up to $2 million, which, for 364 days of coverage, that's quite a high. Even with the rising cost of healthcare, that's a very high ceiling. That's something they don't set that limit to get customer complaints. So
where do you get them?
Short-term plans, you can Google it. I know United Healthcare. I don't represent them. I can't sell them. I don't broker for them. But I know if you just go to United Healthcare short-term plans in Google, they'll allow you to be able to put in your zip who you want covered, and they'll allow you to shop those plans. You don't
tend to offer them.
Yep. Yeah, absolutely. So whereas you couldn't get a United Healthcare plan on the exchange anymore. They dropped out back in 2017, but you can get a United Healthcare plan in Indiana for a short term if that's a company you wanted to go with.
So do you have to have a qualifying event for this, or can you just say, hey, I just happen to not have health insurance. Maybe I'm between jobs. Maybe I'm starting a business and I just want to have a little more time to figure it out. Do you have to have any kind of qualifying event, or can you just buy one with no restrictions?
So that's a good point. Whereas with COBRA, you obviously have to have a qualifying event of losing your coverage. With the ACA, you need a qualifying life event or to be in that November 1st to December 15th open enrollment. With something like Kemper Health or short-term plans, it's whenever you want to go ahead and apply for it, because they aren't ACA plans. They aren't limited to that life event or that opportunity to enroll in them or that enrollment period. They're just health insurance that you can go ahead and apply for whenever. So the 365-day enrollment period is also attractive to some people.
Nice. Okay. All right. Good to know. So last? What is number
Lastly,
4?
okay. So this one is actually, I'm starting to become a little more fond of this. I don't sell it. I don't represent them. They don't, as far as I know, they don't have health insurance agents because it's not health insurance. These are these health share plans. They're cost sharing programs. They've been around 30 plus years. These are not overnight startups. The ones that I've seen are A-rated with the Better Business Bureau. I've heard of clients of mine, other clients, other prospective clients who have said they've worked wonders. I've very rarely heard anything negative about them. But they're Christian based. Okay. And they have become very popular within the past, ever since the ACA came out, actually. Because when the ACA originally came out in 2014, they had this mandate. It was a tax mandate that everybody had to have qualified coverage or they would be penalized at the end of the year. So something like an employee-sponsored plan, something like Medicare, something like Medicaid, something like the ACA, those were all qualified plans. You didn't have to worry about a tax credit, no big deal. They'd send you a 1095-A form in the mail. You file it with your taxes, you're fine. But if you didn't have qualified coverage, the penalty kept increasing. It was either, the last I saw, it was $795 or 2% of your adjusted gross income. That has since been done away with as of January 1st, 2019. There's no more penalty for not having qualified coverage. But the reason that these Christian plans became so popular that we saw was as long as you were even just a bronze level member, the lowest of the low, the one that I used to see was $45 a month, it would exempt you from this mandate. Because within the Affordable Care Act, they're covering things like birth control and alcohol abuse, drug abuse, and rehab. Some of the Christian communities said, we don't think it's fair. We have a moral disagreement with this. We don't think you should be allowed to penalize us for not participating in this. And the federal government said, that's fine. As long as you're a member of one of these Christian share plans, you will be exempt from the penalty. And so they saw enrollment go up like crazy because the $45 a month was cheaper than the most expensive tax penalty. So these people would get a little bit of coverage and they wouldn't have the tax penalty at the end of the year. It was a win-win. The main issues that I have, and I wouldn't even call them issues, but the main caveats for these programs is they're not health insurance. They're going to say it right on their website. It says it right on your card. It says it right on the packet of information they give you. They don't even want to be mistaken for health insurance. They want nothing to do with health insurance. So what that means is they haven't been regulated by the Federal Department of Insurance or the State Department of Insurance. There's no, guaranteed contract of payment. If one of these companies, and I won't name any by name since I don't represent them, but if one of these companies happens to not pay a claim, the Commissioner of Insurance isn't going to be interested in that. If Blue Cross Blue Shield doesn't pay the claim you think it should, you could write a letter to the Department of Insurance and you'd get that claim taken care of really quick because it's an insurance product. So anytime Anthem, Blue Cross Blue Shield, United Healthcare, Kemper Health, anytime we create a health insurance product and we want to bring it to market, we have to go through a rigorous audit to make sure that we have the financial resources, the cash reserves to pay out the claims we say we're going to based on what we're charging and who we're going to be covering. We also can't charge too little for the plan. We can't make it too enticing because then it's not going to work, but they also limit what we can charge. We've got to be right in that sweet spot of where we're issuing our premium. Whereas with some of these Christian share plans, they don't have any of that regulatory oversight. So despite the immensely good reviews I've heard and the good press that they get, they're still very inexpensive. And in my experience, you get what you pay for, especially in the insurance industry. And so a lot of them, they cause you, when you go in, you have to say that you're self-pay. And so then you have to negotiate the bill. And a lot of times when you're going through a serious medical situation, you don't want to have the additional stress of that to deal with. What we've seen a lot of people do.
They don't pay providers directly. They reimburse you once you have the bill. One
of them will work that I know of, and I don't mean to speak a blanket statement on all of them. One of them I know, if the provider is willing, one of them will handle it for you. They will negotiate the bill and everything. I mean, it works essentially the same way health insurance does. They can't use the term premium. Instead, your monthly payment is a donation. They can't use the word deductible. Instead, it's a personal responsibility. Expenses aren't covered; they're shared. It's all these little caveats that just make it clearly different. The largest one. And again, I won't mention it by name, but the largest one out there, you're asked to tell them your self-pay. And just for me and my personal sanity and just my money and my own personal comfort level, I also don't want to be going in to have some type of surgery or have some type of heart episode, or luckily I'm young enough, I don't really have to worry about this stuff, but a cancer bout or something, and have to show up with a card that says this is not health insurance, and have that be all that I have. We have seen in some instances people have, an individual health insurance like Kemper in conjunction with a cost sharing plan. After Kemper negotiates the bill, it's your health insurance. It pays the majority of it. It negotiates everything, whatever's left over. Maybe then you can take that to a cost sharing plan. Then you don't have to negotiate anything with the bill, and they'll help you take care of whatever's left over. I've seen it work that way hundreds of times very effectively. But again, they are not health insurance. They will yell that from the rooftops, and they're proud of that. They don't want to be health insurance. They want to be this community of cost sharing, which in all honesty, Michael, I've heard great things about them. I just can't.
You're not, you're basically operating on trust instead of regulation. So
right.
I'm assuming that if word got out, they stopped paying claims, or they denied people, I shouldn't say claims because it's not health insurance, but denied paying for costs, word would get out and their reputation would suffer. So it sounds like
we'd hear about it.
Yeah, you're trusting in the fact that they honor their word.
And I believe it, but I again, so with every recommendation, there's always caveats. All these different programs exist for a reason. They're all out there to help a certain area, or they wouldn't exist. You know that a product's not going to exist unless there's a consumer.
Yeah, there's a market.
Exactly. The market would have done away with these many years ago, but they're thriving. They're peaking in enrollment right now. So they are paying. I know they are. It's just, you've got to let people know, hey, this isn't health insurance. So if you want health insurance, I can help you with that too. If you're comfortable with this, I'm comfortable with it. So
before we leave the health share option, so two questions. One is, do you have to basically say you're a Christian to join one of these? And follow-up question, are there health shares that are not Christian based? So again, I don't feel comfortable naming them individually, since I don't represent them and I don't want to misrepresent them. But from my research and my helping navigate people through these, there is sort of an attestation that you are of the faith. They ask that a couple of them ask that you not be a tobacco user. A couple of them ask that you don't use drugs or excessive amounts of alcohol. And for some of them, if you are actively treating something, there will be a wait for the pre-existing condition. There will still be, despite the good nature of it and the cost sharing and the communal aspect of it. If I know I've got a $50,000 hip replacement coming up, I can't hop on one and share the $50,000 and expect it to be covered. It doesn't work that way. That's where, if someone didn't have health insurance, I'd try to have them wait until an enrollment period for the ACA where there are no pre-existing questions asked. So I have heard of one, however, that simply asks for an attestation of that you believe that other people can believe whatever they want. It's something of that nature. So not necessarily Christian based. I believe it's still a Christian share, but they're not necessarily saying you need to be of the faith. Got it. That's interesting. Okay. Yeah. So that's a really good walkthrough. So just to recap, I've got 5 options here: employer plan, short-term plan, which is a direct plan for 1 to 4 years. It sounds like, if you want to renew, but a very short-term plan. Kemper Health individual plan, healthcare.gov and the exchange, and Christian health. Typically, Christian health shares are just a health share in general. Those are kind of the 5 we've talked about today. Do you think that pretty much encompasses the landscape of health insurance, or are there little edge cases we haven't discussed? So there's a couple other programs that I frankly, Michael, I've never
recommended them because they're so limited in scope that I don't feel comfortable doing it. If it's in addition to another plan, I'm much more comfortable. Sort of like I'm never completely comfortable with the health share being the only thing, but if other people are comfortable, I'm fine. There's two other programs that simply people are being misled, unfortunately. One of them is a discount program. Okay. This program, it'll say, Aetna PPO, Humana PPO, United Healthcare PPO, and people are buying these for several $100s a month, assuming they have health insurance. And unfortunately, I've heard of some unscrupulous behavior out there through telesales that these people are being told it's health insurance, and it's just not. It's a discount program. So what that basically means is you can take it within those networks and you will get the preferred provider discount, but then you still are on the hook for the entirety of the bill. You just simply have locked in let's say it's a generous one, in the 40% discount. Now that may save you on a $100,000 bill tens of thousands of dollars, which is great, but you're still on the hook for the majority of the bill. And so unfortunately, sometimes I've gone out to see people, or I've sat down with people who tell me they have this, and I'm never one to tell people they are wrong, but I simply sit down with them and I say, well, I would like to see the policy details, and it's a discount program. So those are out there. So be wary of that. And then another type is called a MEC plan. That's MEC. And what that stands for is minimum essential coverage. And for whatever reason, these plans are allowed to call themselves that, when in reality, from what I've seen, they are not minimum essential coverage. These MEC plans do have a purpose. They are not bad by any means. They are simply limited. What they are very good for is covering you for all your preventative. If you're able to have a MEC plan for you and your family, everybody, a mammogram, a pap, a colonoscopy, physical exams, well child visit, immunizations. They may even allow a couple urgent care visits per year per person, maybe an ER visit per person. But as far as the $100,000 cancer craniotomy, it's not going to be health insurance for you. So some people will get maybe a catastrophic coverage or a health share, and then add on a MEC plan to it, and they sort of have their bases covered. There's a lot of companies out there who, in lieu of offering a full-blown employer plan, will at least provide something to their employers. And so they'll offer this MEC plan, where the employers, for a couple $100 a month, will be able to get all their preventative covered, a couple doctor visits at a $40 copay or whatever. Each MEC plan has its own individual options. But like I said, between the discount programs and the MEC plan, they serve a little bit of a purpose, but I personally don't see the value in it. And certainly as an alternative to the other 5 areas we spoke about, they are not a viable, complete alternative. They can be used as sort of a supplement, I think, or an add-on, but as far as a full-blown, I just don't agree with it.
All right. Thank you for sharing that.
Yeah. Mm-hmm.
I also want to say, I tell people this all the time, and not, I think most people try to avoid falling into this, and most people see the value of health insurance. But if there's one thing that always climbs to the top of the list in terms of what can just bankrupt people or just wipe out their finances, it's a major health incident. It's a major accident or a major health event that causes them to rack up medical bills. So I always tell people, like, just get health insurance somehow. Like, don't play the game. Don't roll the dice of not having health insurance. Would you agree?
I would totally agree. And Michael, it's the strangest thing, especially in a pandemic. Some people consider it an expense that's expendable when times are tough. And I understand it. They personally, they're thinking, I'm healthy, I don't need health insurance. Well, you need it before you get sick. That's the time to need it. It's kind of like, you don't want to find out what you have when you go to use it. And as far as the large medical expense, I mean, I've seen it time and time again. Whereas before, when I was telling you how great the ACA is, which I believe it's still a good program. I believe it used to be better. I believe it is getting worse, but I still think it works for the right people. The issue you're going to find with that is the narrow networks. Okay, at least in the state of Indiana, I've heard of other cases in other states. The two plans available in Indiana, they're HMOs. You've got to take the plan where they say you can go. Your primary care physician has to give you all the referrals. You have to go to the facilities. If you happen to go to a provider that's outside the network to seek care because you want to go there, that's when you can rack up a very large medical expense, even still having health insurance. If you need to go see a specialist, say in Houston or Chicago, and you have an ACA plan in Indiana, you're going to have a very hard time getting all your expenses covered. And so as far as the large medical expenses, that's exactly where it can still come into play is if you have insufficient coverage through one of the options, if you don't understand your coverage, you don't understand what you're covered for, or if you don't understand where you're covered. That can be a big hang up for people who, they just might not. I had a woman in Valparaiso. She had an ACA plan and she wanted her daughter broke her arm. Her poor daughter, 4 years old, broke her arm, and up in Valpo, the certain ACA plan they were on, they couldn't see an orthopedic pediatrician within 100 miles. She had to drive to Indianapolis to get it covered. And she did, and everything was fine and it worked out. But that type of
not super convenient.
Not at all for her. And she's a busy woman. They got this big fencing company up there. She's a total sweetheart. She was just frustrated.
Yeah.
And I can see how that'd be frustrating, especially because she still had to hit her $14,000 deductible too, which is another part of the outrageousness of some of this health insurance stuff. So it's really just about finding the optimal fit for people. And to be able to do that, you've got to sit down and you've got to talk to them, because I'm 34 and I'm healthy, but that doesn't mean my choice is right for the 34-year-old down the street, or the 45-year-old down the street, or the 62-year-old woman, or everybody's different. Everybody's unique. You've got to talk to them and you've got to figure it out. Just like I'm sure you don't ever give out blanket financial advice and say, oh, this 401k it's the best. It works for everybody.
Say that.
What's that?
Yeah, definitely can't say that.
You can't. And it would be irresponsible. And it would be, not only would it be bad customer service, it's just bad policy. And so, that's why we go through everything.
Yeah. Well, thank you. Before we wrap up with more information about where to find you, one question I always ask all of my guests is related to wealth. It's the podcast about building wealth. And, this is all insurance themed in today's episode, but this is a key component in preserving your wealth and helping you build wealth by protecting your assets and protecting your finances against a medical event, disaster type scenario where it could damage or could cause a lot of harm to your financial situation. So it's definitely very integral to building wealth, the insurance side of it, and specifically the health insurance side of it. So with that, what does wealth mean to you, Matt?
It's a little complicated. I saw when you gave me this question, I had to give it some thought last night, and it's obviously to me, it's obvious that it's more than just money. It's more than just protecting what you have. It's being able to be wealthy. So for me, it's mind, body, and spirit, but it's also about being able to protect your assets, and be able to protect those that depend on you. And ideally, to be able to accumulate and protect through insurance or financial products, be able to protect what you accumulate so that you can help others who may be less fortunate than you. So protecting, I sell health insurance. I unfortunately, I see unhealthy people every day. Whether it's through poor habits or whether it's just the luck of the draw. There are so many health issues that could never have been stopped. Accidents, genetic diseases, random happenstance. So wealth to me is about taking care of yourself. And that means, trying as best you can to be healthy, but also to protect your assets so that you can, my daughters, they depend on me. I've got to make sure I'm healthy for them and that I'm able to provide for them. So wealth to me is the whole encompassing. I think it's very important to be wealthy in all aspects. And then, like you were sort of saying, it's insurance month. You've got to protect that so that you can help those that maybe are unable to protect it themselves.
Thank you. Thanks for sharing that.
You're welcome.
All right, let's wrap up with a little more about you and where to find you. So I know that for a while or maybe currently you're still working only in Indiana, but you said very soon, or maybe you now you'd be able to work in all 50 states virtually. Is that the case yet?
Very close, virtually. And so I will do in-person appointments anywhere in the greater Indianapolis area, anywhere in the state of Indiana. And then I'm also licensed to help people in the individual market in Michigan, Kentucky, Illinois, and Wisconsin. If I happen to run into somebody who is in another state or out of state, I have resources within Kemper Health to refer them to other clients or other agents who I trust that operate their business in a similar fashion that I do, to help get them in the right situation.
Okay, great. But it sounds like in the near future, you will be able to work in all 50 states.
It will be, yes. I believe Kemper Health is going to, but once that happens, I will let you know.
Okay, fantastic. So, and you work virtually. It sounds like you hop on a Zoom with people and you can do
anybody, whatever their comfort level is. If people are still comfortable to meet at a coffee shop or in their living room, I'll mask up and we'll hand sanitize and we'll get through it. But virtual, absolutely.
Okay, fantastic. Well, Matt, thank you. This has been super informative. I love being able to dig into all these options. Pretty eye-opening for a lot of people, I think, to understand what's available to them, and just going beyond just the typical one or two options they've heard of. They have some more education now to make a better decision. So I really appreciate that.
Sure,
so,
absolutely.
So in terms of contacting you, we'll definitely link to your LinkedIn profile. I know you're active on LinkedIn. What's a good way to contact you? Do you have a direct link to a website, or what's the best way for people to reach you?
So I've actually developed a website with a business partner of mine. If you go to the URL www.choosemyhealthinsurance.com, there's a way to sign up for a virtual one-on-one session through that, where we'll go through the framework and we'll help you out with that. Other than that, kemperhealth.com works. I will link my email and my phone. Honestly, the best way to get a hold of me is to just shoot me a text or give me a call. I always have my phone. Anybody that I work with in any aspect, if they have even just one product through me, they have direct access to me via text, email, phone, whatever they're comfortable with.
Okay, great. Well, I'll be sure and put a link to your LinkedIn profile here in the notes, and the link to that website as well. Again, choosemyhealthinsurance.com.
Yes.
So if someone is looking for health insurance, that'd be a good site for them to go to and start there.
That's not a bad place to start. And then call, LinkedIn, email, whatever makes sense.
All right, cool. We'll add those in the notes then. Awesome. Yep. Matt, thank you so much. Really appreciate your time today. Really appreciate you being on the show and helping all of our listeners in the community learn more about health insurance. So we appreciate it.
It was a pleasure being on, Michael. I appreciate it.
All right. Well, thanks everyone for joining us today. As always, you can find me on the web at elevationfinancial.com. Feel free to book a meeting there if you'd like to chat. And we're glad you joined us today. Thanks so much. We'll see you next time. Have a great day. Okay, we are off the air. So I want to say thank you to anyone watching via video as well. Thanks for joining us for the pre and post green room sessions, where I also say goodbye to video people. So Matt, pleasure having you on, and thanks everyone for joining us. Just a reminder to everyone viewing on video as well. These do go live every Tuesday at 1:30 p.m. Eastern. So we do queue these up on the schedule, but if you want to kind of tune in and watch live and post comments live as well, 1:30 p.m. Eastern. On the Elevation Financial Facebook page, as well as the YouTube channel. So go find Elevation Financial on Facebook. Look for the little stealth bomber pointing up blue logo. Click like, and you'll be notified when every one of these is scheduled. Again, 1:30 Eastern every Tuesday. Thanks, everyone. Have a great day.